The Dow is on pace for its 8th straight losing week. In fact, the first time that's happened since 1923. And while everyone else is getting more defensive, my next guest says it's time to start taking on more risk. Here with some names he would buy is Christian Ledoux, Director of Investments at Captrust. I mean, we're talking AT&T risk, not like anything too crazy here, Christian. But what are the stocks and the reasons why you think investors shouldn't be afraid to tiptoe into equities right now?
Well, Kelly, thank you for having me on this Friday. I wish I could say it was a happy Friday. But what I would say is we have seen the initial signs of inflation coming to a peak. And I know that that's the primary fear in the market today. But when you see things like what happened to the retailers yesterday, they're bringing on too much inventory. And what has happened when you get too much inventory, the retailers put it on bargain. So that's what we have to look forward to. And the other big component of the CPI that should get some relief going down the road is housing. You got a 5% mortgage rate now, 5.5% actually. That's going to start crimping demand, and we'll see prices come down there. So that could be your story of the second half of this year, where the Fed maybe doesn't have to raise as much.
And that's, I was going to say, that said, you actually like a home builder here as well.
Right. Well, let me hit AT&T first. So AT&T is the one that you want to buy during a volatile period like this. Very stable business, as you might imagine, telecom services. AT&T made a horrible acquisition way back in 2016 with Time Warner, and they finally unwound that. We're now seeing signs from management that they've been sufficiently chastised and are willing to stick to the core business, cut costs, and raise prices. These are the kind of things that show incremental positives on a stock that's had a pretty bad 5-year period.
So that's the case for AT&T. We know it's just been a tougher one, but in a way, people might feel safer in it these days. Let's talk Pulte. Nintendo as well is another name you think screens well right now.
Absolutely. So Pulte, you're going to have to be cautious on the timing aspect of this, but what we're seeing is a stock that peaked over a year ago. And this is during a fabulous home building market. Profits continue to rise for this company. And yes, we are going to see a downturn in housing, as I indicated earlier. What we'll probably see, though, is the stock bottoming well before the next upturn comes. So if we see a bit of a housing recession in the next few months here, which is probably likely, this stock could actually start moving up in anticipation of the next boom.
Well, the stock's even been moving kind of sideways the last several weeks or so, which is a somewhat encouraging sign. What about Nintendo?
Well, Nintendo is a zigger when the others are zagging. I like that kind of theme. PlayStation and Xbox, those new consoles came out a couple of years ago. Nintendo is about to do its new console coming out late this year, early next. So they'll have the market clear to themselves. They are also an iconic brand manager. So you've got the Mario Brothers franchise, the Zelda franchise, many others. They can continue to run with those stories. And I'll give you a wild card. When Microsoft decided it was going to try to buy Activision, it is making some concessions in order to make that close by allowing Call of Duty, one of their biggest games, to be available on the Nintendo platform. So you can see a bunch of new users on that.
I like Wildcards. What is the main discussion you're having with clients these days? Do they even want to hear stock ideas, or do you have to kind of, again, make the case more broadly about why their holdings aren't about to keep falling in value?
Well, what we're telling clients now at Captrust is, of course, there's going to be bear markets. We're touching on one now, but a lot of stocks are already in bear market. I think a prior guest of yours just pointed out the median stock in the S&P is down 30%. Go to the Russell 3000 and the median stock's down 35 to 40%.
Wow.
A lot of damage. The unprofitable tech index down 75, 80%. So the Fed has accomplished what it was trying to do, pop the asset bubble. And that's still giving us a lot of new opportunities going forward, but also that the real economy stocks, the businesses like AT&T trading at less than 8 times earnings with 5.5% dividend yield, they're attractive now as well. So you've got a lot of opportunities out there.
All right. Christian, great to have you today. Thanks for all your ideas and wild cards.
Thank you, Kelly.
Christian Ledoux with Captrust.